Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about Euro USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COD data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is clearly overextended to the downside with this massive impulse to the downside, but at the same time, it is also testing a quite strong historical structured zone. In fact, what we know is that from here, all these previous rejections to the upside were created. Just one time the market broke below the level, but immediately broke back above. And at the moment, the market is exactly inside of this level, overextended to the downside, so there's a good probability to see some institutional longing inside of this zone, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders analysis. For now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. We can notice how the market has just reached exactly the previous low, and it is already starting to reject the level to the upside. This means that we currently have a double bottom at this zone, which the market already tested and is currently respecting as support, which increases the probabilities of a potential push higher away from this area. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, the situation is quite clear. We can notice how first we had the creation of this massive M pattern, and I made a full breakdown of Euro USD when the market was here, explaining all the reasons for which I was expecting this rejection to the upside, the closing of the gap, and for the market to create this push higher, which is in fact exactly what the market did. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. But at the moment, what kind of structure we have? Well, before we go into more details here from a daily perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. Now, if we're looking at the data for the euro, the first thing that we have to keep in mind is that if we're looking at the euro, we are already looking at Euro USD because all currencies on the spot are traded against the USD. And we can notice how with the last report, net positions have been increased from minus 66.6k to minus 58.6k. So clearly there has been a slight increase of net positions with the last report. And actually, if we look at the long term, we can see how net positions have been steadily increasing from minus 75k to minus 58k right now, which shows how essentially institutions have been increasing their longs, which went from 152k to 162k, and shorts got decreased from 232k to 221k. Now, again, if we're looking at the euro, we are already looking at Euro USD. So clearly institutions are slowly moving back to the bullish side for Euro USD. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, clearly we have a market which is testing strong support also here on the daily. Multiple rejections to the upside already have been created away from this level, and at the moment the market is testing it once again. However, we still have bearish structure. In fact, until the market will remain below this previous high, this market from a daily perspective has just created a new lower high, so it can easily continue lower. In order for the market to push higher, it would need to successfully break above this resistance. Only at that point, this previous resistance would become support, and in my opinion, on the retest of the previous resistance turn support, that is where there is a good probability to see more institutional longing, further increasing the probabilities of a potential rejection to the upside away from this level. So if we do get the break and retest, at that point, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would create this break and retest, at that point, I wouldn't be surprised that if the market would shift from an intraday bearish to a bullish market, at that point, we get more institutional longing and a potential rejection to the upside. That definitely wouldn't surprise me. Now, all this general free education and analysis that you see me provide on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go and check out my transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to all my courses, starting from the very basics of charting all the way up to the more advanced topics like how to build automated trading strategies using the MQL4 language, how to build portfolios of strategies, and using quantitative finance tools like the Quant Analyzer to actually build those portfolios of strategies. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations. You can get one-on-one mentorship directly with me. Also, you can gain access to the COT data software, which you often see me use on my YouTube channel. This is an all-in-one program. In fact, on top of all of this, you also have the possibility to gain access to all my personally developed EAs, so my automated trading tools. Here, you will see all the presentations of each and every one of them. And also you have the possibility to gain access to the trading show, so essentially a live stream of all the trades happening in live time from my live account. And if you continue to scroll down past the testimonials, you will see that you can also find the button to join now, and you will essentially be put in contact of my WhatsApp number. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in my next video. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.